Morning, everyone, and thanks for joining us. We have our next instalment of our monthly update with Gil on leave and tinkering in the shed, hopefully steering clear of the emergency department at Maitland Hospital. We've got Paul to take us through everything that's happened in the last month and a bit of an update, of course, on COVID and how the markets are trending. But without any further ado, I'll hand over to Paul. Paul.
Yeah, thanks, Chris. Yeah, welcome everyone. Welcome to the monthly update. Of course, I've got there. It's 11th of November. It's we just got to remember those people that have taken the major sacrifice to give us this great country that we live in now. So lest we forget. All right, let's get stuck into it. I have got a bit of an agenda if my clicking will work. So just quick agenda. Chris basically covered off on it. So the COVID update, US election, major things happening there, stimulus package, and then we'll end up with some questions. So the usual housekeeping. So if you got a question, just put it on the chat line there, and then Chris will open this up for and hopefully we can answer your questions. COVID update. So we've been seeing some really good news in Australia. Still not great news overseas, but in Australia we've done really well in the last 30 days. And I've just put up there the last month's table, which is down the bottom, and I've put the most recent table there for the COVID cases in Australia. And of course, Victoria have just hit a record 11th day without any cases. I haven't seen overnights, but yeah, it's been pretty amazing that the cases have been reduced so much. So just to give you a bit of an idea, there's in the last 30 days, we've had about 400 new confirmed cases, which is a pretty good record considering since COVID outbreak started back in January, we've had about 27,000 cases. So it's great news there. So that's a good sign. Obviously, everyone's been hearing about the Victoria starting to open up their economy and starting to open up, and Victoria have been released from their restrictions or their severe restrictions. There's still a bit of restrictions going on, and of course now they're allowed out. People can go to get their hair cut and do some of the things that they haven't been able to do for a little while, and they're able to travel a little bit further and those sorts of things. But one of the things that I came across was this little graph here, which I thought was really interesting. Centres Daniel Andrews has decided to release people and let people get out and about. So opening bars and things like that. I noticed the change in the personal care space where people are wanting to get out. They're excited about it, and they're wanting to do themselves up and get their hair cut and do these things and make them look good, and so they can go out and present themselves because they're so excited to get out and about. So it's good to see. So yes, New South Wales are just going along as they are. There's still a few more confirmed cases there, but it's good to see Victoria starting to hit their straps now, and starting to get back to normal, whatever normal is. One of the things, and you probably noticed the markets over the last couple of days, that this partnership between the US Pfizer and German BioNTech company come out and said they've got a pretty effective vaccine, that they've gone through some late stage trials and they've had a 90% success rate in that vaccine. So the markets have jumped on that, and as you've noticed, they've gone up fairly well. So, which is good. A lot of optimism that we're going to have a vaccine fairly soon. Hopefully next year. Hopefully early next year. But if not, it'll be later next year. So that's pretty good. But yeah, they're going through some late trials, some trials with some volunteers, and where they received a couple of injections over 3 weeks. And there was no major side effects from that, which is really good. So yeah, there's lots of promise there. All right, so the big one, the elephant in the room, which has just happened in the last week or so, which seems to be one of those events that it just won't finalise. It's not over. Even though it's over, we're pretty confident that we know Joe Biden's got in as as the next president of the USA. However, he doesn't come into play until about 20th of January 2021. So unfortunately, Trump's still around for a little bit longer, and it doesn't look like he wants to leave either. So it's going to be a very, very interesting next couple of months as we lead up to inauguration. So hopefully, these legal challenges won't come to anything, and hopefully Joe Biden will come in okay. But the whole point of this period of up and into inauguration is about handing over from the former president to the new president. So I think Joe Biden's going to have a bit of a challenge there on having that smooth transition. So yeah, it's going to be very interesting. So it's kind of watch this space and hold on to your seats. One of the other things that's so what does that mean for the markets? What does Biden mean? What does Harris mean about that? I found this interesting website about the Biden-Harris and what they're all about and what their priorities are, which I thought was quite interesting. So I've got the website down the bottom there. Worth looking at what those two are focusing on. And having read some of that, I thought it was, I can see the 4 priorities they've got there, and I think they're pretty good priorities. And I think the biggest topical one is racial equity, and the climate change is just rearing its head more and more. So hopefully we can see Joe Biden start to make some progress and inroads, and not just focus on the economy. Which is what Trump has done for the last 4 years, which hasn't been a bad thing. The markets have held up pretty well, which I'll show you graphs a little bit later. But yeah, worth having a look at that website about what Biden and Harris are all about. So that's really good. But what is uncertain, and I think once this becomes certain, the markets will take off even further, is the Senate. So you've got the House, which they've been talking about, the 540 seats that were the 270 seats that Biden needed to get to become president. That's made up of the 2 houses, similar to Australia. And part of that is the House is sorted. That's pretty much reasonably clear that the House is okay, that the Democrats have got that, but it's the Senate that's a bit tricky and a bit interesting on how that works. So the Senate is basically, it's every 2 years they have an election for the Senate, and basically a third of the Senate is re-elected each time. So there was only 35 seats of the Senate that was up for this election, and they've caught about 31 of those seats. So it's neck and neck with the Republicans and the Democrats, and they need 51 to win. So that's where it's going to make it a bit tougher for Biden to make any of these changes that he wants to do happen, because potentially the Republicans are going to keep the Senate. So,
and the interesting thing there, Paul, is that if they don't get control of the Senate, there is actually the possibility that will be good for markets, because with coming in, they will spend money for economic recovery, and that's unlikely to be blocked at all. But one of the things that they will want to do, that's the Democrats, is that they will want to have policies that are more focused towards social issues rather than economic issues, and that'll include taxes. So one of the things Donald Trump has done is he has reduced taxes for the wealthy, and when the Democrats come in, they'll want to reverse that, but that won't necessarily be great for the markets. So even if we do have the Republicans holding on to the Senate, then we're still likely to see a fairly decent economic outcome. Social outcome, different story.
Yeah, definitely. Yeah. I think it's going to be tough on those social outcome for Joe Biden. But I guess we'll just have to wait and see. So yeah, like I said, hold on to your seats and watch the next 70 days turn out. Hopefully Trump will leave the White House, but he's not. There's no sign of him requesting the removal trucks just yet.
I read this morning, Paul, that there was an article that said that there's a chance that Donald Trump could pardon himself. So
Yeah, well, he can.
yeah. So
Yeah, that was
anything
really
that he's
interesting.
done that he might get into trouble for, one of the things that that the presidents might do at the end of their term is that they might pardon someone and release them from jail or that sort of thing. But he's got
Yeah.
the speculation is that he might pardon himself.
Yeah, well, that's right. Yeah, or he could actually resign, and Pence that's he could pardon Trump. So Pence would become the president, and then he can pardon Trump from all the wrongdoings that he's done, because that was one of the ironic things is, does he become president or does he go to prison? So yeah, it's going to be interesting to see how that goes, whether he pardons himself or whether he gets Pence to pardon him while he's still in office and he can still make those strong decisions. So because I think every president in the last few years have pardoned someone or some particular area, pardoned some people, so from going to prison or getting them out of prison. So yeah, interesting what they can still do even though they've been ousted as president. So yeah, very interesting, very interesting. All right, market update. So after all that, the COVID update and the US election update, and they've been the biggest drivers of driving what the markets have been doing over the last few weeks. Look, I believe the US market have already priced in Biden getting in. But in terms of the Australian market, let's say over the last month, it's done fairly well. Back in 30 days ago, it was about 6,100, the top 200 in the Australian shares, and now it's hovering around that 6.3 sort of mark. So we can see it's done okay. It's obviously late October, early November, we had a fair drop there, and it started to get concerning that the markets are going backwards, and they haven't quite got the COVID vaccine yet. But there's obviously promise with the COVID vaccine. I think that's been one of the things that have helped with the markets more so than the US election. RBA, yeah, that's been a big one. And unfortunately for most of our clients, that's a disappointing thing because we're getting even less returns on our term deposits in our bank accounts and those sorts of things, that the returns are not being so great when you want it in a safe environment like the banks. In saying that, where it's a positive thing. Well, we need to be having it invested in a wide range of investments. Part of the reason the RBA cut rates was the high unemployment. They were predicting it to be about 10%, but now they're expecting it to be about 8%. So that's actually a positive sign. But they still decided to cut the rates, and that's because they wanted to support the economy. They feel like it's not recovering as quick as they would like it to recover. So that was all about trying to boost the recovery and get some more money out there as well, so to stimulate the economy. How does it assist the recovery with lowering the cash rates? Like, you think 0.25 to 0.1, is that really going to make too much of a difference? And the biggest thing is about just lowering the funding costs. So people and banks to being able to borrow the funds, and therefore they can lend it out, and then people can buy houses and they can get infrastructure projects up and running, and companies can go do the projects they were kind of putting on hold. So it's all about stimulating that growth and that the economy. So, and of course, supporting the credit and the economy. So that was 30 days. It's always a good thing and as all clients know, that we talk about the long-term and long-term returns because we need our money to last. So it's always a good idea to just refresh what's happened over the last 5 years, and rather than focus just what's happened in the last 30 days. And as you can see, the Australian market, it was about 5,200 5 years ago. And now it's around that 6,300, even though we had that COVID correction back in March this year. So you can see if you panicked when that COVID happened and you pulled your money out, then you would have missed the returns over the last 6 months. So we're not quite back pre-COVID, but if we looked at the last 5 years, that we've gone up about 20% since 5 years ago. So just another good reason why, when we talk about growth assets, that we want a good component of your portfolio in growth assets, because if we didn't, we would have missed out on that 20% return over the last 5 years, compared to interest rates, which, as we know, now are lucky to get 0.5% for a term deposit, and even 5 years ago you're lucky to get 2%. So yeah, so it's good, I guess, putting in perspective of why we say we've got to have a portion of your portfolio in those growth assets. It's good just to rethink why we do things. Yeah, so strong recovery, overall positive over the last 5 years. Continues to be volatile. Like I said, with the US election, it's not sorted yet. There's still a little bit of uncertainty. So I think we're still going to see a fair bit of volatility over the next few months. Okay, so once again, it's been patient and just keeping a strong, steady view on what's going to happen. US markets, similar sort of story. As we know, the Australian markets often tend to follow the US markets. Quite often the US markets does a little bit better, because, especially over the last 5 years, because they've been heavily weighted to the tech stocks. Also, because of COVID and lockdowns and things like that, businesses have changed things, and we've talked about in the last few seminars about how the way of doing business. The US market didn't go so bad during the COVID, and they've recovered a lot better. As you can see by that graph, they recovered from pre-COVID, and that's because the tech stocks have held pretty well over this COVID period. So, and that's what's boosted up the US market quite a bit compared to the Australian market, because the Australian market has a very small space in the tech space. So it's the US market have held pretty well. However, in the last couple of days, the markets have gone backwards because of this vaccine, potential vaccine that's going to be coming out fairly soon. There's a lot of optimism on a lot of areas that have done badly during the COVID, and whereas the tech stocks they've come back. Things like Zoom. Zoom was a success story during the last 5 years, but also during the COVID period, that it increased about 500% in the last 12 months, the Zoom share price. But in the not last night, but the night before, it went back 17% because of this COVID vaccine. That, well, okay, so people are getting back to normal. Schools are getting back to normal. They're not holding those meetings and classrooms over Zoom anymore. So it's had a bit of impact in not just Zoom, but a lot of the tech stocks as well. So the last couple of days, I think the NASDAQ, which is the tech index, fell about 17% the night before, when that COVID positive outcome came through. So yeah, interesting. Yeah, so that's all that. Couple of interesting things I thought was really interesting, which happening with the China, Australia, US tensions going on at the moment, was this graph I came across about the wine exports to China, which is pretty interesting. As you can see, the last 6 months, 7 months, while COVID's been around, yeah, it's been negative exports to China. But as you can see in September, there was a sudden increase of 73% in our exports to China. China basically pretty much told 4 of the top Chinese importers to stop buying Australian wine, which basically put a halt in over the last month or so. But back in September, it just picked up, and I think that's potentially because let's say the 4 Chinese wine importers knew this was going to happen and it was going to come, so they stocked up a fair bit, and that's why we had that sudden increase in wine exports in September. But in 2019, China's export industry was worth $1.26 billion. And if they stop that wine, that's a big indent into our economy. So hopefully that'll get flipped around. But yeah, we just have to watch that space. But I just thought that was a bit of an interesting point that I saw there. A couple other interesting things that I've come across over the last couple of weeks was US Airlines. They've started to move around a fair bit, more domestic, and they tipped over 1 million passengers in the last for the first time in the last 7 months. That's been a big significant increase. And I look at some of the airports, and I've heard stories where it's the airports are just chockers. It's almost back to normal. Whereas you look at our airports in Australia, they're pretty slim still. So you can see that's the difference between the Australian and the American way of coping with this COVID. That the Americans are just wanting to get on with things and keep the economy propped up, whereas Australia is more focused on the health and restricting that. And it's pretty clear with the COVID cases that we've had pretty good success about that. So one of the other things, first time in 30 years, rents have declined. The rental income, rental prices have declined for the first time in 30 years, which is pretty interesting. So yeah, change there of negative. And I think a lot of that's to do with the fact that there's less migrants coming over and basing themselves in Australia. So there's, I guess there's less demand for rental properties. So yeah, it's possibly not a great time to be a residential property owner where you've got an investment property and you're trying to rent it out. So I don't think we've seen that impact in Maitland and the Hunter, but certainly in Sydney and probably more so in Melbourne, where they've got less people coming over to find rental properties. You think about the students, university students coming across. Well, they're not coming across anymore. So.
And there has been a bit of a movement, Paul, away from the cities for that sea change, with people being able to work from home.
Yes.
And so, yeah, those CBD areas are not as popular as what they were previously.
Yeah, definitely, especially when the rents are much higher in the CBD, where it costs $800 per week for a 1-bedroom unit in Sydney, compared to $450 for a 4-bedroom home in Maitland. Which to us, $450 per week in Maitland is pretty high. But yeah, like you said, yeah, people are moving out of the city because they can, work's allowing them. There's a lot of businesses, a lot of government departments still where the workforce isn't back into the office. So yeah, certainly interesting times, lots of interesting points to be looking at. One of the other things that came across yesterday, actually, it was as more of a personal interest about electric vehicles. And even Chris, I think you might have a bit of an input into this one. You're changing the way what vehicles you're buying. But I thought it was really interesting in Germany, where it's a 376% change or increase in sales in electric vehicles in some sort of form in terms of hybrid or full electric. You think about the Teslas where they're full electric. There's a big rise in there. I don't know if there's anything in Maitland, but there's a lot of charging station. Well, there's actually a charging station in Green Hills up the top, one of the top level car parks. So you're going to see a few more of that electric charging stations around the place. So
yeah, and I wonder if that means that maybe we've just hit that tipping point where it's not the expense is not outrageous to go to say a hybrid vehicle, whereas a few years ago the cost of the battery meant that you had to be really keen to have. It was more of a green decision about saying, well, I don't want to be polluting, than it was a financial one. But I know in my case, the last car that I bought was the RAV4 hybrid, and I think to go to the hybrid was only about an extra $2,000.
Oh, there you go.
And
I remember when the Prius came out, Chris. When the Prius came out, it was like $10,000-$15,000 extra to go the hybrid from the Camry.
Yeah.
It's like, yeah, you've got to be really dedicated to make that step.
But we might be getting to the point now where it's actually a financial decision.
Yeah, definitely. Yeah. Well, you probably found out the cost of running the vehicle has significantly dropped.
Yeah, absolutely.
And probably recovery time of recovering that extra $2,000 has probably made a huge difference. You're probably going to recover that in 12 months time or 2 years time even, which is significant recovery.
Would have been if I was driving as much as I used to be, but with COVID, not quite so much. But yeah, we'll get there for sure.
Yeah, definitely. So, yeah, because I remember, it would have been a few years back. I was looking at the Corolla and I was thinking, do I go to the hybrid? But it was this would have been about 3-4 years ago, and it was about $4,000 extra difference. But that was going to take me 5-6 years to recover that with the amount of driving I was going to do with that particular car. So yeah, it definitely wasn't worth it for me at that point in time. So, but yeah, I guess the thing to take away from this was the fact that the change in society, the change in how we're doing things, and the electric vehicles is a good example of how that's changing. So yeah, not only producing the fuel, but also the carbon emissions and things like that. So pretty much all but America have got this Paris Agreement where they're trying to cut down the emissions that each country's producing. So, which I think a lot of the European countries are very dedicated to doing that, and hence that's why you see a lot of the European countries are changing the way they buy their cars. Yeah. Anyway, I thought that was pretty interesting. Stimulus message, won't spend too much time on that because just a couple of things that have come out with Daniel Andrews coming out with free childcare for single parents, mainly targeting women and trying to get them back to work, whereas possible approximately $2,000 per child in childcare incentives there. So to encourage, I guess, single parents to get back to work, send their kids to daycare, which is more targeted for the 3 to 4 year olds. So in daycare, long daycare with a kinder program. So it's very targeted stimulus measure there. Potentially costing the Victorian government 170 million, which is probably nothing compared to what stimulus measures they've had to come out with, and what the federal government has come out with stimulus packages as well. And the other one which only came out the other day was the JobKeeper, that it was going to stop at the end of December, which was the $250 per fortnight extra. That's going to continue for a little bit longer, but it's going to reduce down to 150 per fortnight. So just helping those that's meant to be job seekers, by the way, not job keepers. Job seekers to help them prop them up a little bit for a little bit longer. Yeah. Yeah. So overall, look, most clients have seen this little chart that we have there, in trying to explain that we have a portion of your funds in defensive, portion in growth, and with the defensive, trying to make sure that you've got 4 to 5 years worth in defensive type assets, and then having not at the rest, but a fair bit of your investments in the growth assets as well. And I think that ties back to that 5-year graph that I had there in the Australian market, was making sure that we have a good proportion across growth assets, but also have that defensive portfolio to make sure that we can continue paying income payments if that's what you require, and that we're not selling growth assets on that time that we see the COVID corrections hit, or the recessions, or whatever you like to call it, those downturns. And so we don't have to panic, because we know we've got that protection in place in the defensive type assets for 3, 4, 5 years. So yeah, just reinforcing that's why we do those sort of investment strategies. And then I think that's pretty much it. Hopefully most of you know the team there. And we got any questions?
Just have a quick look. Doesn't look like we have got any questions.
Okay. I think, yeah, if we haven't got more questions, I think that nice and short and sweet, I think it was, in that presentation. So unfortunately we didn't have Gil to give his insights, his outlandish, shall we say, insights into what he feels, and which it's great to hear his opinions, and what he thinks. So it's good to hear that, and it helps us have those conversations with clients as well. But yeah, he's always trying to predict, and yeah, it's certainly worth valuing that. And yeah, so it's a shame that we couldn't have him there, but hopefully he's safe and well in his shed.
Thanks, Paul.
Yeah.
Thanks everyone for joining
Thanks,
us. We expect to be back again next month, and that'll pretty much wrap us up for the year. We're very, very close to Christmas now. I think our expectation is that we will be open right up until Christmas, and happy to help in any way we can until that time. If any questions do pop up, please get in contact with us. We're always available to you. But for now, that's it. Thanks very much for joining us, and we'll catch up with you next time.
Excellent. Thanks, everyone.
Bye.